Welcome to Gross Total Income video. After going through this video, you must be able to calculate gross total income of an individual, identify the deduction from gross total income. Taxable income of an individual is the total amount generated by an individual from various income sources, and this amount is paid as taxes to the government under the Income Tax Act. For calculating the taxable income, the gross total income is calculated from 5 income heads. After computing the gross total income, deductions under Section 80C and 80U are made. The amount after the deductions is the taxable income. Tax on this income is calculated as per the financial bill of the respective year. At times, either excess tax is deducted at source or excess advance tax is paid. Under these circumstances, the excess tax paid can be filed for refund. Next, let's look at the 5 income heads under which gross total income is calculated. The gross total income of an individual is the sum of all income earned in a particular year. The major source of income that are included as part of gross income are salary. It refers to the amount earned by an individual working in an organization or for another individual. For example, Amar is working with ABC Private Limited. He receives Rs 35,000 as salary. This Rs 35,000 includes basic pay, house rent allowance, travel allowance, and other allowances. House property. It refers to the amount earned from a house property owned by an individual. For example, you earn a rent of Rs 10,000 per month from a flat that you own. This rent that you receive is a part of your income, profits and gains of business and profession. It refers to the profit or other charges earned by an individual in a business or any other profession. For example, if you conduct tutorials at home and earn a regular monthly income, this becomes an income from profession. Capital gains. It refers to the gain acquired by selling an asset. For example, you buy shares worth Rs 1,000 and sell for Rs 1,500. You have made a capital gain of Rs 500 in this trade. This income is taxable if sold within the year of purchase. Income from other sources. It refers to any other income an individual might earn for any services, any interest earned on fixed deposits or saving account. The sum of all the above income is the gross total income of an individual. There are certain deductions made in the gross total income to calculate the taxable income. Next, let's see the list of deductions available for an individual taxpayer. A conveyance allowance refers to the allowance paid for an employee for commuting from residence to the workplace. A conveyance or transport allowance of Rs 1,600 per month is allowed to be deducted from the gross salary of an individual. If the expenditure incurred by an employee is less than the allowance paid by the employer, the excess amount is included in the gross total income of the SSE. Deductions under Section 80C. The maximum deduction allowed under Section 80C is Rs 1,50,000. Let us see the various deductions that are allowed under this section. A. Investment in Public Provident Fund or PPF. B. Employees' contribution to PF. C. Life insurance premium paid. D. Repayment of home loan. Only the principal amount is considered. E. 5 years fixed deposit scheme in bank or post office. F. Contribution to National Savings Certificates or NSC bond. G. Tuition fee paid at the time of admission or thereafter for 2 children. H. Deposit in Senior Citizen Savings Scheme 1984. I. Sum paid as subscription to Equity Linked Savings Scheme or ELSS. Interest on education loan. Section 80E. Any interest paid for an education loan by an individual for pursuing higher education or for relatives is allowed for deduction. For example, an interest of Rs 50,000 on your education loan is deductible from your gross income. Interest on loan taken for residential house property. Section 80EE. Any interest paid for housing loan is allowed for deduction subject to certain conditions, including the loan has been sanctioned by a financial institution on or after 1st April 2013. The amount of loan sanctioned should not exceed rupees 25 lakhs. The value of the property should not exceed rupees 40 lakhs. Medical insurance. Section 80D. Any amount paid for medical insurance of an individual, spouse or children is deductible. The maximum amount allowed for deduction under this section is rupees 25,000 per year. For parents older than 60 years, this amounts to rupees 30,000 per year in addition to the provision mentioned above. Contribution to an annuity plan. Section 80 CCC. Any amount that is deposited in an annuity plan of an insurer for pension is deductible. Contribution to NPS account. Section 80 CCD1 and 80 CCD 1B. Any contribution made to the NPS account is deductible. The maximum amount allowed under this deduction is rupees 1 lakh plus rupees 50,000 is equal to rupees 1,50,000 per year. Aggregate amount of deductions. Sections 80C, 80 CCC and 80 CCD. Aggregate amount of deductions under Section 80C, 80 CCC and 80 CCD shall not exceed rupees 1,50,000. Donations. Section 80G. Any donation made to certain funds, charitable institutions and so on is deductible subject to certain conditions. This deduction may be allowed up to 100% without any qualifying amount. Deduction for interest on deposits in saving account. Section 80 TTA. Deduction of an amount of rupees 10,000 is allowed if the gross total income of an assessee includes any income by way of interest from the saving account, not includes time deposit. Contribution to Rajiv Gandhi Equity Scheme. Section 80 CCG. Medical treatment for handicap dependent. Section 80 DD. Medical treatment for self or dependents for certain diseases. Section 80 DDB. Contribution to any political party. Section 80 GGC. Deductions on income by way of royalty of a patent. Certain donations for scientific research or rural development. Section 80 GGA. All of these deductions are allowed from the total taxable income of an individual to help save taxes. Next, let's look at an example. Particulars of Mr. Sharma's income for the previous year ended 31st March 2016. Basic salary rupees 35,000 per month. Bonus rupees 20,000. Conveyance allowance rupees 24,000. Education allowance for 2 children at rupees 600 per month is equal to rupees 7,200. Advance salary acquired amounts to rupees 40,000 in the month of January 2016. Monthly rent of rupees 6,000 earned from a house. Municipal taxes paid rupees 3,500 per annum. Dividend received from a listed domestic company rupees 7,000. Interest received on fixed deposit rupees 5,200. Purchased 100 equity shares at rupees 950 per share on 10/10/2015 and sold it at rupees 980 per share on 28/2/2016. The gross total income of Mr. Sharma is rupees 5,61,500. For the sake of calculation, gross annual value and maintenance charges for the house at 30% has been ignored. Education allowance at rupees 100 per month is exempt. As the equity shares were sold within 1 year, it is added to the short-term gain. It is assumed that security transaction tax or STT has been paid by Mr. Sharma. The summary of the tutorial on gross total income has been put on the screen. I will pause for a few seconds to allow you to read it.